Rudy Frank will be our next speaker. I mean, this is a short bio because Rudy, you've been focused on Seabridge Gold for over 2 decades, since 1999, and he served as the company's CEO since that time. Rudy is a graduate of Columbia University, from which he holds a Bachelor of Science in Mining Engineering and a Master of Science in Mineral Economics. Always a pleasure to introduce Rudy. Please come to the stage.
Thank you. What a privilege being back at this conference. Rick, thank you for continuing to invite us back and supporting us for over 2 decades now. As we look at conferences that we choose to attend over the course of a year, to me this is probably the one that I like best. It's not just because of the content that Rick brings in here in terms of the great speakers he has to talk about different concepts and educate all of us. It's about the ability to spend time with shareholders. All these other conferences we attend, you don't have the ability on this one-on-one basis where you can set up a booth, people can come talk to you and learn about the company. Last night, seeing a bunch of friendly faces come back that we met last year and the year before, and also new faces showing up. To me, that's the best part of this conference. A reminder that I will be making forward-looking statements during this presentation. I think being a CEO of a gold company, you're obligated to do that. Our industry, as Rick maybe has pointed out a number of times, could be the worst allocators of capital of any industry on the planet. The amount of money that goes into the ground versus the amount of money that comes out is ridiculous. Share dilution is a common element to the mining sector, whether it be junior companies or senior companies. When people buy a gold mining stock, the expectation is that if the price of gold goes up by 10%, the price of that stock should go up by more than 10% because of the operating leverage that company has. If that weren't the case, just buy physical gold and eliminate all the operational risks, political risk, and other risks associated with mining. If you look at our industry over the long haul, our industry has not delivered those returns expected by shareholders. Over the past 25 years, which is the time period when we're looking at Seabridge over the long haul, the gold industry has underperformed the gold price by a meaningful way. Gold is up about 680%. Newmont is up 160%. Barrick is up 11%. The industry is falling down in its promise and its deliverability of returns to shareholders as the gold price goes higher. Why is that? Companies just issue too many shares. It's that simple. If you look at the share counts of the major companies over the past, since the financial crisis in 2008, share counts at Newmont, Barrick, Kinross have more than doubled. They were just getting bigger, they were not getting better. Take Barrick, for example. Back in 2007, they had 8 million ounces of production. Today, they're reporting 4 million ounces, although they've doubled their share count. Their reserves have gone from 125 million ounces of proven and probable gold reserves to about just over 77 now. Their per share metrics have been decimated. Ounces of reserves per common share and production per common share. The only company that I have the respect for in our space is Agnico Eagle. Yeah, they've gotten bigger over the years, no question about it. They've actually issued on a percentage basis more shares than the other majors, but they also have grown their production considerably, while at the same time maintaining reserves per common share. I was delighted to see Sean Boyd agreeing to come to this conference and be a presenter over the next few days. If you listen to one presenter here from a major mining company, listen to Sean, because he has done it right over the long haul. When we started the company, one of our guiding principles was to try and grow ounces in the ground faster than shares outstanding. The thought being that the more gold we can provide on a per share basis, the better our share price should do in a rising gold price environment. And we have delivered on that. If you look at our share price over the long haul relative to the gold price, we have outperformed the gold price on average over the past 2.5 decades by about 10 to 1. No company in the space has come close to that. And the way we've been able to do that is quite simply by being very careful on how we spend our shareholders' money. Yes, we have to suffer dilution to raise dollars to buy things and conduct exploration. But we've been very careful to make sure that the dilution we do suffer is more than offset by ounces in the ground. We have a 25-year track record of doing that. We have a 25-year track record of outperforming gold and other gold equities. If the gold price is going higher, which obviously I believe it is, and a lot of speakers here have just told us why it is going to go higher, owning shares of Seabridge makes a lot of sense. If you look at us relative to the industry in terms of ounces of gold in the ground per common share, whether you look at it in terms of reserves per common share or gold resources per common share, we have 5 to 50 times more gold ownership per common share than others in the industry. We talk a lot about gold. I'll be honest, we got lucky. One of the assets we acquired back in 2000 that I'll spend time on in this presentation also generated a lot of copper discoveries. At KSM, we now have 59 billion pounds of copper in all resource categories. If you ignore our gold, our silver, and our molybdenum, and just look at our copper, we actually have more copper per share than the leading copper companies or those gold companies that also produce a lot of copper. And why is that important? Well, as bullish as I am on gold, you have to like copper in terms of the world we're going to see over the next 5 to 10 years. Our industry cannot provide enough copper. That's going to be required by growing demand because of the green energy initiatives. So having some copper exposure makes a lot of sense. Another guiding principle from day one was to avoid political risk. In my career, which now spans over 4 decades, I built mines. I've had mines I built expropriated. Political risk is a real risk in our space. If you don't believe me, go look up at the share price of First Quantum and see what happened to them down in Panama. These things happen from time to time, and they continue to happen, which is why we have focused all of our activities on North America, Western Canada, and the United States. Our 2 most advanced assets are KSM and Courageous Lake. Between those 2, we have over 50 million ounces of proven and probable gold reserves. And we have 3 earlier stage projects, Iskut, 3 Aces, and Snowstorm, that we believe will provide the growth in ounces as we go forward and start to explore those aggressively over the next few years. I'm going to be spending most of today's presentation on KSM. For those of you that have signed up for a luncheon on Wednesday, I will be covering in more detail the other 4 assets in the portfolio. KSM, it's the project that keeps on giving. Again, just an indication of how poor allocators of capital the major gold mining companies are. We bought this project in June of 2000. The previous owners was Placer Dome, which at the time was the 3rd largest mining company on the planet. Placer Dome spent $25 million at KSM, finding 2 deposits. And in an environment when gold was at $2.60 an ounce and copper was at 65 cents a pound, they sold us this asset for $200,000. This asset is now, if you ignore the copper and just look at the gold, it's the largest undeveloped gold project in the world. As Rick said, size matters. If you ignore the gold and just look at the copper, it's the 3rd largest copper project in the world. This has scale, both in terms of gold and copper. It's also located in an area called the Golden Triangle, which is quickly becoming the go-to space for the major mining companies. Newmont last year acquired Newcrest to get 100% control of Bruce Jack, which is our next door neighbor, and the Red Chris mine. You have Teck in the region now for a number of years with large copper projects, and you have others like BHP, Freeport, and others that are coming into this district because of the potential of finding big gold and copper deposits. If you fast forward to today, we've now spent $1 billion Canadian advancing KSM, not only in terms of size, but also in terms of engineering studies, permitting, and along the way, we have the strong support of the indigenous people that are affiliated with the project. Another benefit we have is infrastructure. When we bought this project in 2000, there was no roads, no power, no ports. As a result of other people's expenditures, we now have a major highway, Highway 37, that runs just to the east of KSM. Along that highway, the government of Canada and British Columbia spent over $750 million extending the power grid, bringing cheap hydropower to the project. We'll be able to run all of our power requirements on KSM with hydropower that we'll be able to buy off the grid for about 5 cents per kilowatt hour. In fact, we have secured through contractual agreements with BC Hydro 245 megawatts of power from this line. And then last but not least, to the south of us, we have ports. If you're going to make a copper concentrate, you need a port to ship it out to a smelter on the Pacific Rim. We have 2 ports there that already are in existence. One that's been there for a while that was rehabilitated recently, and a brand new port that's waiting for an anchor tenant. This saves about $2 billion of capital we don't have to spend because it's already there. In terms of the scale of this project, we talk about this being a project. What we have is a district. We have 5 deposits at KSM. Kerr and sulfurites were known when we bought this asset from Placer Dome. We found Mitchell in 2006, we found Iron Cap in 2010, and we purchased East Mitchell from our next door neighbor, Pretium, in 2020 for $100 million in cash. Collectively, these 5 deposits give us 12 billion tons of economic resources, hosting 160 million ounces of gold, 59 billion pounds of copper, nearly 1 billion ounces of silver, and over 1 billion pounds of molybdenum. I'm doing a talk on Wednesday. If you add all the metal that we have as a company in terms of defined 43101 resources, at today's metal prices, there's over $8,000 of metal in the ground per common share. Our shares are on sale for $14 a share. So just think of that in terms of the optionality and the leverage that we have to higher metal prices. As we went through the environmental assessment process at KSM, we are now limited to 2.3 billion tons of tailings capacity because that's what we have permitted. We have 12 billion tons of material to play with. So over the years, we've been looking at different ways to sequence the mining activities from these 5 deposits that generate the best project economics, the quickest return on capital, and the best financial metrics. After we purchased East Mitchell in 2020 from Pretium, we actually did an updated pre-feasibility study focusing on the 3 higher grade gold deposits relative to the 2 higher grade copper deposits relative to gold. And we were able to show a mine plan of 33 years, capturing the 2.3 billion tons of tailings we have permitted, that produces over 1 million ounces of gold a year on average over those 33 years, and 178 million pounds of copper. People talk about all-in sustaining costs of production. The industry likes to focus on that, although they tend to not remind you that their all-in sustaining costs doesn't include the capital they spent. Our all-in cost of production here, which is a true all-in cost that includes the upfront capital of $6.4 billion, the sustaining capital over the 33-year mine life, the reclamation costs, and the operating costs net of copper and silver credits, at today's copper price is about $500 an ounce, all in for gold. The industry is making gold today on average for about $1,400 an ounce. This project will have an improvement of $900 per ounce of profitability compared to what the industry is making gold for today. And let's not forget that that only includes those 3 higher grade gold deposits. What about the copper deposits? We also showed an add-on mine plan, a bolt-on mine plan, focusing on the Kerr deposit and the Iron Cap deposit that add another 39 years of mine life on top of the 33. If you actually play this out and play out the full 12 billion tons of economic resources we have, you're looking at a mine life here that goes well in excess of 100 years. That's why we have the support of the First Nations, because they see a project here that has longevity and something that's going to generate a lot of jobs and contracting opportunities over multi-decades. One other thing that we have that stands KSM apart from other projects is we are permitted. We went through the environmental assessment process from 2008 to 2014 and then receiving our permits in 2014. However, those permits are set to expire in July of 2026. As we talk about potential joint venture partners for this project, which is our goal, that becomes a major risk that anyone looking at this project, nobody's going to come in and spend $6 billion or commit to $6 billion knowing that these permits can expire in July of 2026. Fortunately, in British Columbia, there's a mechanism known as substantially started, that if you can achieve this designation, your permits are then good for the life of the project. In 2021, we decided to go out and do this ourselves. We raised $375 million US, about $500 million Canadian. Rick's former company, Sprott, was the one that provided most of that capital. We've now spent those dollars on building roads, building bridges, building fish compensation, tying into the power grid. And most of those expenditures actually went to First Nations related companies. We finally submitted our application for substantially started in January of this year, along with strong letters of support from the Niska Nation, the Tahltan Nation, the Gitxsan hereditary chiefs, and the local communities, as well as BC Hydro, asking the government, please give them this designation. We need this because we want to continue to work with Seabridge on advancing this project. I was in BC a few weeks ago. I met with the Premier. Based on the feedback we're now hearing from the regulators, we believe we'll have this designation in hand by September, which I think is the last piece of the puzzle we need to have in place to get a joint venture partnership done with a major mining company. People are surprised to hear when I talk about my family's investment in Seabridge. We have 95% of my family's net worth in Seabridge common shares. Fortunately, I have a very patient and understanding wife who grew up in the oil sector. Her dad was an oil man, and she understands the concept of volatility and long time horizons. So why are we making such a big bet on this? Well, number one, I do believe that the price of gold is poised to go higher. We write a lot about the gold market on our website. We have a section called The Case for Gold, and you go back and look at what we've been saying about gold for the past 20 some odd years. I also believe that the industry today needs new projects of scale. The gold mining companies are running out of reserves. The copper companies need new mines. There was a study done recently that was reported that over between now and 2040, 5 new copper mines need to get built every year. As somebody that's in the business, I can guarantee you that 5 new copper mines will not get built every year because of how challenging it is today to take a project from discovery through engineering and then through permitting. The lead time or the timeline that's required now for projects the scale of KSM tends to be in excess of 20 years. So good luck in our industry trying to sustain and build the mines that are needed to provide the copper that's going to be required. As a result of that, as bullish as I am on gold, I'm also bullish on copper. I do believe we're going to see copper at multiples of where we're seeing it today over the next 5 years or so. And then last but not least has been our ability to find gold. Our exploration team has found over 100 million ounces of gold through exploration activities over the past 20 years. That's more gold through drilling than any of the major mining companies. We've done it also a lot more effectively in terms of our finding costs. Our direct finding cost per ounce of gold at KSM was about $1 an ounce over the years. We now have 3 earlier stage projects in the portfolio, any one of which can be a company maker in its own right. We're now starting to work on those through exploration activities, and as a result of that, I believe we're going to be able to continue on our promise and our guiding principle of offsetting equity dilution with ounces in the ground. If you're going to own one gold stock, be like me. It's easy. All you need to own is Seabridge. So thank you very much. Seabridge's president, Ryan Hull, and myself will be at the booth during all the breaks. Please come up, introduce yourself, and happy to talk more about it. If you did sign up for our luncheon on Wednesday, make sure you come to the booth to get your ticket. Apparently, we're going to run short again like last year. So thank you, everyone, and enjoy the show.